While economic growth is sluggish, earnings are rebounding. ExxonMobil and Chevron, the two latest examples. Exxon saw its earnings double, while Chevron swung to a profit. Both were helped by cost cuts and a rise in the price of oil. That helped send shares of the Dow components higher in trading today. But as Bob Pisani explains, there are still some headwinds for the industry.
You could say big oil earnings are at a crossroads right now. The markets are near historic highs and earnings are rebounding nicely. But the one fly in the ointment is the energy stocks. They're down more than 10% this year. This while the S&P is up 7%. That's a huge disparity. It wasn't supposed to be this way. This was supposed to be the year of the big turnaround for big oil. But so far that has not been the case. Crude oil is down 9% year to date. The global energy market is undergoing a massive transition, shifting the focus away from the Middle East and toward the U.S. It's a huge help to consumers, and it's a big headache for big oil. The result is the investor love affair with energy is waning. Oil stocks don't just lose on a fundamental level, they lose as a relative value play. Why buy oil stocks with oil down and the rest of the market is up? You take ExxonMobil. They reported earnings this morning. The good news is they beat earnings expectations, and overall earnings more than double compared to the first quarter of last year. That's largely because oil prices improved from about $30 a barrel average in the first quarter last year to $50 in the first quarter this year. That's good news. The bad news is the price of oil is trending down recently, and they're producing less of it, at least Exxon is. The magic combination of an improving economy plus OPEC production cuts was supposed to drive oil to $60 and maybe beyond. Well, what messed this whole thing up, of course, was shale production. Even if OPEC continues to cut, how can oil move up when you have this enormous open faucet that is North American shale? The big hope is that eventually oil prices will rise again, fueled by an improving global economy, continued OPEC cuts, and less capital spending by the big oil companies. Well, we'll see. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.